In recent months, the disparity between fundamentals and market valuations in junior resource issues has become increasingly obvious. Against a backdrop of long-term demand growth and strong metals prices, even ventures with exceptionally good news can't get any traction in this market. We asked Mickey Fulp, our mercenary geologist, what's behind the current bear market mentality and what that means for your investment strategy now.
Once again, for the third year in a row, we've had a brutal May, pretty much promulgated by concerns about the crisis in Europe and specifically Greece. So Greece is obviously somewhat of a second world country, but we still see this affecting the entire world economy because of concerns about Greek debt. And that filters very much down to the junior resource sector with a risk-off, aversion to risk philosophy.
Despite what Fulp sees as a market largely characterized by fear, he also sees major buying opportunities just on the horizon.
At some point in any bear market, greed will come back. So what we're looking at here, I think we have the summer doldrums looming. So we've got this period in July and August that historically is a downtime, basically because of lack of liquidity. And lack of liquidity, low volumes, is really the problem in the junior resource sector now. So I expect that to get worse before it gets better. But at some point, fundamentally strong stocks will become in what I would call screaming buying opportunities.
Fulp has a number of key criteria for and a seasoned approach to picking stocks in soft markets.
Well, number one, you want to be able to do your own due diligence and research, and you want to find fundamentally strong companies. You want a tight share structure. You want people with experience in the sector that have been successful before, and you want a flagship project that is well advanced and can gain the attention of analysts, newsletter writers, and the general public. You also want that stock to be undervalued. Well, that's not going to be a problem. Most of these fundamentally strong stocks will get taken down with the rest of the market, and at some point they're going to reach a bottom. It's going to be very hard to pick that bottom, but all you want to do is get close to the bottom and start to accumulate those stocks.
Fulp recommends using stink bids, bids substantially below market, to accumulate fundamentally strong stocks.
So you pick a price, you do a risk-reward profile on the company. Pick a price that you say, that makes my risk-reward profile. Put in a bid. If that bid gets filled, then you say, okay, now I own that stock. I'm happy to own that stock. If that bid never gets filled, it has not reached your risk-reward profile where you consider it a buying opportunity, and you go and find another stock that may. If your bid gets filled and it goes lower, then you put another stink bid in, so you're continually accumulating a fundamentally strong stock near the bottom and become very well positioned for a rebound, which I certainly think will occur.
While he remains bearish over the short term, Fulp thinks markets have or soon will reach a bottom, the time when smart buyers always make their move.
So although I am very bearish in the near term for the junior resource sector, there will be a time, and I think it's coming this summer, when we will hit a bottom, and that is the time that we need to accumulate fundamentally strong stocks. I'm a contrarian. I like to buy stocks when they are unknown, unloved, unwanted, and undervalued, and certainly all four of those criteria is going to happen this summer, and that presents a very strong buying opportunity for the astute speculator.
For Financial Profiles, thanks for watching.